My next guest has business experience, banking experience, gold experience. He's been in the banking system. He's run a top 100 FTSE company before over in Europe. I'm talking about Egon von Greyerz of Matterhorn Asset Management. Egon von Greyerz, thank you for joining us today on USAWatchdog.com.
Greg, thank you for inviting me. Always a pleasure to be on your show.
You are in Switzerland, correct?
I'm in Zurich. I'm sitting in the middle of Zurich, in the old town of Zurich.
Okay. So the terror attack in Belgium, it's on your continent. I know it's not next door, but wow, that's some gruesome, grisly attack in Belgium with all the rail traffic shut down in and out, all the air traffic shut down in and out of Belgium and Brussels. 34 dead so far. What is your feelings about what's going on and the carnage that's going on in Belgium and all this unrest and upheaval with the refugee crisis in Europe?
Well, it's obviously a very sad day for our friends in Belgium, but at the same time, we know that this is just the beginning, not only in Europe, but in the world as a whole. We are going to see a much more insecure world, and this is worldwide. We know that the refugee problem or the migrant problem into Europe certainly has included a number of potential terrorists in many countries. And of course, the attack, they arrested the person responsible for the Paris attack just 4 days ago, who happens to be a Belgian citizen. But nevertheless, these are people who are immigrants, of course, and the problems that we in the West have created, that is the US and Europe have created in the Middle East, North Africa, will lead to more of this, because, as you know, there's anarchy in Libya, there's anarchy in Iraq, and this is the West that has created it. So they're paying us back, and I don't think that's finished, and we will see a less secure world, as I said, and it's not just Europe. US will have similar problems, I'm sure. It hasn't started quite there yet, but I'm sure it will.
Go ahead.
No, go ahead.
No, I want you to finish your thought. I'm sorry. Please forgive me. Go ahead.
I think we could see now a development where there's not only now it's in Brussels, which is the center of the European Union, of course, but we could see not just cities being bombed, but also again planes. I wouldn't be surprised, and at some point there are people who are forecasting, and very, very intelligent people are forecasting that this eventually will kill tourism in the world. For a period. I hate to say that we are starting a period of insecurity and a less stable world, and whatever the leaders say of the various countries, US, Europe, terrorism is not something you can fight with force, in my view.
Do you think that one of the goals of, I had one of the big NATO generals on saying that they, that the immigrants have been infiltrated with Muslim extremists, and that their goal is to attack Europe, and eventually their goal is to take over Europe. What do you think about those words by top NATO commanders saying that they, that the problem that has been caused by the West is now coming back to bite them, and I guess the people that have been displaced and the enemies, whatever ISIS that was created in part, I guess, by the U.S., is coming back to bite everybody.
Well, I have a slightly different view. Of course, it will come back to bite, but when a military or a naval officer talks about this, he has a vested interest because he clearly thinks that he can fight this with force, and it can never be solved with force. If the West withdrew, that is the US and Europe withdrew from the Middle East and withdrew from North Africa and didn't interfere in these affairs, I think these problems would disappear. But sadly, every time there is an attack of this kind, then the West wants to escalate rather than actually pull back, and I think that's what they should do. So until that happens, I think we will have more problems.
Could this kind of thing shake the financial system? Could it bring down the financial system, starting in Europe?
Yes, absolutely. You have to remember that you're looking at a financial system which is extremely fragile. So all you need is some kind of catalyst, and this certainly can be the catalyst. But the system will not come down because of this. The system will come down because we have a rotten world where most major nations are bankrupt, and where the financial system has not recovered from 2007-9 and is in a worse state today than it was then. And therefore, this could very well be the catalyst, and I wouldn't be surprised if it will be.
And do you think that this is going to start a new round of more intervention? We're going to get more of what got us here. We had, thank you, Hillary Clinton, for your Libya policies. Thank you, Hillary Clinton, for your Syria policies and NATO and the neocons. I mean, we were funding ISIS. Now there's reports out saying that that ISIS is now biting Turkey back, and that the monster they helped create with ISIS now is out of control. Is that something that?
And of course, the attack on Libya that was led by the UK and France, but it was actually on the instigation of the US that this was started. That attack created total anarchy in Libya and a breeding ground for ISIS in Libya. So what we have done in the West, we have destroyed these nations and made the risk many times greater than they would have been if we hadn't interfered. And that's so sad, but that is history. We all make such big mistakes in history, all of us, and now it's gone too far. So, yes, it will certainly change the world, both from the security point of view and from a financial point of view, because that was going to happen anyway, and now it will definitely happen.
So under a backdrop of a very weak economy, as you just mentioned, a global economy, if you look at the Baltic Dry Index, it's just a sled ride right downhill in the last year or so. If you look at the global economy, the backdrop very weak and not recovering global economy, and if you look at the backdrop of war and terror, what are your clients? You store gold for people in secret locations at your vaults in a couple of places around the world. What are your clients telling you about their fears and about what they see in the future? What are your big player clients telling you?
Well, yes, we are fortunate to have some very secure vaults. Well, we do have vaults in Zurich, Singapore, and Hong Kong, but we have one of the most unique vaults in the world, which is in the Swiss Alps. But that is nuclear bomb proof, earthquake proof, gas attack proof. So that is the safest vault in the world in a secret location, and it's a very big gold vault. And of course, more and more people now want to go into that type of security because it's out of a major city, and it is, you can't break into it basically, not even with a nuclear bomb. So clients we have had a steady stream of investors even throughout the period when gold went down from 2011 to 2015. But even today, major investors, if you speak to, let's say, a typical family office, they're not into gold. If you meet 50 family office leaders, one of them or two of them might have gold. So that is to come. It is so fascinating. Canada now sold its last bit of gold, which was, I think, $27 million. So Canada has no gold left. That is the Canadian government. I'm just thinking, and the reason was they say it's difficult to trade. You can't trade gold. Well, that's ridiculous. Of course you can trade gold. It's more liquid than anything else in the world. But I wonder if this is, you need one of these little signs, another catalyst if you want, like we had in 1999.
Gordon Brown.
Yeah, Gordon Brown sold half of the UK gold, or more than half. Swiss National Bank sold more than half of the Swiss gold. So this is another sign that, the central banks always act at the wrong moment, just before something happens. Anyway, I think that we have seen a turn in gold, but major investors are not buying gold yet. I mean, we get the wealth preservation type investors, come to us. But if you take the average investor, even if it's a family office, a wealthy individual, or whether it's institutions, they don't have any gold. We just had an institution in Europe, Allianz, it was that bought gold now, but that was very small. They just put a toe in the water. They bought for tens of millions, or which is nothing compared to the billions they have. So institutions don't understand it yet, but just you wait. When money printing starts and when inflation starts, every single institutions will buy gold.
But then you won't be able to, it'll be difficult to even get it at that point. It's not a very big market.
Absolutely. No, there won't be more gold available, and all the gold that's produced today is being absorbed by primarily China and India and a few other countries. So when demand increases, what will happen is that there won't be the gold available. But if somebody today, let's say an institution wants to buy gold for 100 million, which is nothing for an institution, but let's just take that as an example, he would today get 2.5 tons of gold. In a year's time or so, or 2 years, instead of he will still buy for 100 million, but instead of getting 2.5 tons, he might get half a ton or a ton maximum. So he will get a lot less gold for his money, and that's what it's not going to be adjusted by producing more gold, but by just everybody getting less gold and paying more for it.
And I want to go back to the clients that you do have, because obviously you have a pretty big business that you can run these secret vaults that are nuclear bomb proof, and so you must have some real hitter clients, real big clients, in order to have this kind of a business on a couple of continents. What are they telling you? What are your clients telling you about what they see coming?
Well, we are fortunate enough to have the wealth preservation type clients. These are clients who understand what's happening in the world. These are clients to understand not only the geopolitical risks that we just talked about, but also the financial and the economic risks in the world. So they are people who are insuring themselves against the future risk in the banking system, of sovereign defaults, and also the risk of hyperinflation. So these are people who understand that. But remember, there's only 0.5% of world financial assets in gold. So these people are a minority. And obviously, they understand our language, what we are saying, because we are absolutely certain that investors must hold gold against the risks that we see in the world, because we think that the risks, there is nothing, whether whoever becomes president in the U.S. or whoever becomes a new head of central bank in whatever country in the world, is not going to change anything. We are now set on a course when the world is going to go into a decline, which will sadly make times a lot more difficult for everybody in the world.
And you think the bonds are, at some point, that's where they're printing all this money, no matter if you're in the Treasury bond, the Federal Reserve notes are printed off that, and euros, I'm sure they're backed by their assets, the bonds, and you have a lot of financial experience, and you're saying that the money's going to go poof. Is that right?
I cannot for the life of me understand, Greg, how anyone can put any money into sovereign bonds. Every single government that's issuing these bonds, whether it's the U.S. government, European central bank or governments, or Japan, well, they're just increasing their debt and the deficits every year. Some of them, like Japan, can hardly afford to pay the interest at 0%. And the U.S. hasn't, as we discussed before, hasn't had a budget surplus since 1960, and debt is increasing exponentially. So none of these governments in the world are going to repay debt. So why is anybody buying government bonds? I mean, it just goes beyond me. I cannot understand it, because they know they're not going to get back the money. They might get back some funny piece of paper, which will be worthless because the money will have then been devalued to nothing. And secondly, if they get it back a piece of paper, it'll be like a 30 or 50-year bond that will be worthless at expiry. So sadly, most of the world does not understand what's happening yet.
And yeah, do you think that the what's been going on with the stock markets, these big deep dives, and then they're coming back up, and particularly in the U.S. stock market, do you think that's everybody says they don't trust the rally? J.P. Morgan says sell into the rallies. A lot of the big banks are telling their clients to sell into the rally. What do you think about this big dive in January and this big upswing in the last 25, 30 days in the stock market?
What's happening now is a trap, of course. In my view, the downturn started. It started first time in August last year, but now in January, this is the start of a downtrend in stock markets. We've seen now the correction that makes some people optimistic again. But in my view, stock markets are now starting a secular bear market, which will eventually take them down at least 75 to 90%. That was the fall in 29, and I think we will now, the bubbles are so much bigger than they were in 29, and now they're worldwide. And therefore the fall, 90% would absolutely not be abnormal in my view.
And do you think that that some people say, well, they won't let that happen? Look what just happened in January, the worst January on record ever, at least in the U.S. stock market. I suspect the same in the European markets. The worst January ever, and look, they brought it all back. The S&P is almost back to where it was at the end of 2015. What do you say to those people? That the governments will not let anything bad happen?
I say, tell them, God bless you, because you're going to lose all of your wealth. The wealth destruction that we will see in coming years, whether it will take 3 years, 5 years, or 7 years, I don't know. Sometimes these things take longer than you think. They have so far. In my view, it's taken longer than it should have done. But it can also happen very quickly once it starts because of all the risks in the world. So I tell people, please, get out of the stock market, the ones who actually want to have some money left at the end of this period. And, if I say that stock markets might go down as much as 90%, then if you take the gold stock market ratio, a gold or stock market against gold, I think most stock market against gold will go down by more than 95% or 99% even, because gold will go up and stock markets will crash. So we will see the most massive wealth destruction in history worldwide in coming years. Gold will act as insurance for and even if people don't believe it, there's never wrong to buy some insurance. But of course, we will have much bigger problems than that, because we just talked about the bond market, and then you take the stock market, and then there'll be the same with other bubble markets like property market. So the financial system, in my view, will not survive in its present form in coming years.
And what do you make of the rise in gold? The beginning of December of 15, it was about 10.50. Now it's about 12.50. Nice move. What do you? I know you don't really, make calls on moves and buys and sell on gold. You sell gold, and you're a long-term investor. But what do you make of the $200 move in gold?
Well, I think the trend has turned. It's been a very slow turn. We know that we had the tops in 2011. Most markets bottomed around 2013. When I say most markets, I mean that gold against most other currencies bottomed in 2013, either in June against many currencies, or in December. So it's only the dollar that's been slightly stronger, and therefore gold has been weaker in dollar terms, but against all other currencies, gold has been stronger since 2013. And now we've seen the final turn in the dollar also. I think that this is now starting the secular bull, or continuing the bull market in gold that started in 99. And I think, as you say, we're not buying gold in order to make money. We're buying gold to preserve wealth. But I think because of what's going to happen in the world, investors will also make money, i.e. they will gain more on their gold than just maintaining purchasing power, which is what gold really does. So, talking about targets, when we started buying gold or went in actually quite a big way in 2002 at $300, then I said I expect gold to reach 10,000 in today's money. And I still believe that that is at least what gold will reach, $10,000 in today's money. So now, as I also have said before, I don't expect we will have today's money because I think we will have hyperinflation and massive money printing. So therefore, we could put a few zeros at the end of the gold price, whether it's 100,000 or 100 million or 100 billion. It doesn't really matter because you're buying gold to preserve purchasing power. Nevertheless, I think gold will rise substantially in coming years in real terms, and I would say that within the next 5 to 7 years, I would say that in today's money, 10,000 is the least, the smallest rise we will see. But then, what is interesting also, because to talk about gold, silver has been hit even more, of course, and silver went from $50 down to $14, and if you look at the gold-silver ratio, when silver was in $50 in 2011, the gold-silver ratio was 30. It's since a beginning, only a month ago, or less than a month ago, it was 83, which is an historical maximum. So the gold divided by silver is 83. 83 times the silver price is the gold price. Now, that is, I think, we had some technical cyclical tops at that time, and at the same time, and this is the historical high, I see silver moving a lot faster than gold, and I could easily see silver coming down to the 30 level, as we talked about before, which means 30 ratio, and you take 10,000 gold, then you're talking about $350 in silver at a minimum, but I think we could even come down to the 15 ratio, which is the historical long-term average on the gold-silver ratio. And then you're talking about silver, about $650. So silver will move a lot faster, but I have to warn investors that it's extremely volatile, and therefore it's not for widows and orphans, and gold is a safer bet, but silver will certainly move faster. And technically that has been confirmed now, so therefore I feel very bullish about both the metals.
And final words on the economy, global economy, because you think globally, and you can pretty much see. It just seems to me that this is a very tenuous year. These big swoons in the stock market, this big drop in the Baltic Dry Index, all kinds of negative news about the Chinese market. Do you think that there's any way the global economy can get better or better enough to make it another couple of years, or do you think are you seeing trouble signs that you haven't seen in the past?
Greg, I will happily admit that I have been wrong on the timing before. I've been right on the trend, because that's very clear. And the risks and the events that I've outlined, all of that is inevitable. This time, I actually think that there's nothing that governments worldwide can do. They will come out with a massive money printing program worldwide. There will be, I think we talked about last time, after the Fed rate increase, I said there's not going to be any more increase.
Other people are saying the same thing you are now.
Yeah. So, and I think the Fed eventually will go down to zero again, and then negative rates, because the world will be in a mess. But what I'm saying is the money printing this time will be like pushing on a string. They are not going to achieve anything. It's just gone too far, and therefore it will have a very, very short term effect, and the world will decline very fast. And as you said, you got the Baltic Index, you got all the container indices, you have exports in China, in Japan, in Korea, worldwide. Exports are coming down very, very fast because world trade is coming down, and the world downturn has started already.
And you're saying, you're forecasting, again, the Fed said, well, we'll have 2 rate increases instead of 4 in 2016. And you say?
I say that there is no chance for them in this year to increase rates because of the problems that will be coming. But of course, in a couple of years' time, with the hyperinflation, whatever the Fed wants is not going to count, because the bond market will collapse, and therefore the long rates will go up eventually to the teens at least, and they will pull up the short rates. So at that point, the Fed and the central banks worldwide will lose control of interest rates because of the bond markets collapsing.
Egon von Greyer's Matterhorn Asset Management. All the links for you folks watching this on YouTube, you can go up to the right through and you can see, all links are on usawatchdog.com. You can find Egon von Greyer's fine website. There's free information on it. Egon von Greyer's, thank you for joining us today on usawatchdog.com.
Greg, I'm so sorry I haven't painted the rosiest pictures for your viewers, but I think everybody today must understand the risks that we are facing and therefore take action. So I really enjoy speaking to you again. Thank you very much, Greg.
Egon, just to let you know, to be forewarned is to be forearmed, my friend, and we want the truth. We don't want something candy coated. Thank you for giving us the truth.
Thank you very much, Greg. A pleasure talking to you.